Hi, so this is the continuation cash flow statement and this is the 8th problem. Jyoti of Stars Oil Limited has collected the following information for the preparation of the cash flow statement for the year ended 31st March 2011. So we need to do with this problem by using indirect method, and so we can do that because they gave net profit, right? So according to our format which we discussed in the second part, we need to start the solution by net profit before tax, right? So here they gave net profit and they gave provision for income tax and then they gave income tax paid during the year. So if you want net profit before tax, that means which is 25,000 net profit, you need to add provision for taxation which is 5,000. Total 30,000 is net profit before income tax. Why provision for tax? Because in P&L account you might have debited the provision for tax, right? 5,000. So that's why, which will affect your net profit. Since you are debiting this, your net profit will become less, which is 25,000. Now we need to add back that. So that's why we have added 5,000. So it became 30,000. So net profit before income tax is 30,000. So we are doing cash flow from operating activities. First thing we need is net profit before income tax, right? Done. Then, so according to our format, we need plus non-cash and non-operating expenses and non-cash and non-operating incomes. If it is non-cash and non-operating expenses, we need to plus it. If it is operating income, it is minus it, right? Okay. So first, loss on sale of asset. So this is a non-operating expenses which is 40, right? So put under here. Why in P&L account you might have debited it, that means you might have minused it, right? So now we are doing plus and it is non-operating, it is not related to your operations, right? So it is non-operating. Now so we are done with this. Now depreciation charge to P&L account which is 20,000. So this is non-cash item. In P&L account you might have deducted it, so now we need to add back. So here 20,000. Profit on sale of investments. Profit on sale of investment in P&L account you might have added it, so now deducted it. So it's a non-operating income. So how much you got? 100 rupees. So minus that. And then interest on income in investment. See here you have two things. One is interest income on investments, three things, and interest expenses of the year and interest paid during the year. So if the interest on income and investment, it will come under the investing activities. And then interest paid will come under the financing activities. So we'll assume that interest paid is for the, we paid generally when we borrowed money from banks, then only we'll pay interest, right? So interest paid is financing activity. And then interest expenses, we assume that that has been incurred for the operations. So this will be interest expenses in P&L account you might have deducted, so now add back interest expenses for the year 10,000 as a non-operating expenses, right? And interest expenses of the year and interest paid, you won't record this in the operating activities, you will directly record it in the financing activities. And then interest on income and investments, you might have added it, so now deduct that. So interest on income on investments is 2506. it will be considered as a non-operating income. So in simple words, interest on income and investments and interest expenses of the year will be considered in the non-operating and non-cash expenses and income. These two will be considered in the operating activities. While doing here, you will consider these two. But whereas this won't be considered while doing non-cash and non-operating, it will be considered only in the financing activities. Right? Okay. Now next one is increase in working capital. So that means, so we have done um, we have added all the non-cash and non-operating expenses, and also we have deducted all the non-cash and non-operating incomes. So what we will get the operating profit before working capital changes, right? And then they mention that increase in working capital changes excluding cash and bank balance. Generally they will give the current assets and current liabilities. We need to find out increase or decrease, but they directly gave the net effect here. So how to deal with this? So working capital formula is current assets minus current liabilities, right? So here increase in working capital, which is 56,081 rupees. 56,081 rupees. When increase in working capital will be arise? For example, current assets minus current liabilities is equal to 100 rupees, right? Now it became 150 rupees. So let's just say for this one, it was like this is 150 rupees and then this is 50 rupees. So obviously it will become 100 rupees, right? Now this 100 rupees has been increased to 150. That means when it will happen, when the current assets will increase more, that means current assets has been increased to 200 minus 50, it will become 150. So when there is an increase in working capital, we can say there is an increase in current assets, then only it will lead to increase in working capital. So according to our table which we have discussed in the uh, second part, current assets, current liabilities, if it increase and increase and decrease, if it is increase current assets, if it is decrease inflow, so increase outflow, right? So current assets here, if it is increasing outflow, that means this 56,081 rupees is outflow, so we'll deduct that. So put in the deduction column here, increase in working capital, deduct that. So operating profit before working capital changes is 57,434 minus 56,081 rupees. So then we will get cash flows from operating activities will be 1,353 rupees. And then income tax paid during the year is 4,248 rupees. So then you will get the net cash flows from operating activities, which is in negative 2895. Okay. Now cash flows from financing activities. So here, so let's come from the beginning of the question. This will come in the financing activities, and book value of the asset sold, which is 185. We sold it for 40 loss. That means total is 185. We sold it for 40 loss. That means we would have sold that for 145, right? So the same thing, right, in the investing activities. Cash receipts from selling of assets, which is 145. Then, so this is also done. Then profit on sale of investment, which we already done there. So we sold some investments which is 27,765. We sold it for profit of 100 rupees. That means 27,765 plus 100. 27,865 worth of investments we sold. This is the cash we have received. So put here cash receipts from selling of investments. And then interest on income on investments. Interest on income on investments. So we should record this as a cash inflow because that is arising because of investment, which is investing activity, right? Yeah. And then interest paid during the year will be considered in financing activity, and then this is already considered. And then purchase of fixed assets, investing activity, 14,560. Cash outflow, investment in joint venture, cash outflow 3850, right? And then expenditure of construction in work in progress, cash outflow 34,740. And then this is proceeds from calls in arrears is financing activity, receipts of grant of project financing activity, proceeds from long term borrowing financing activities. Okay, so then if you do all those things, you will get the net cash flows from investing activities minus 22,634. Now let's do the financing activities. So as we discussed here, all these are financing activities. First, proceeds from calls in arrear, 2 rupee 2, and then cash receipts from receipts of capital grant, which is this. Let me show you the question properly. Yeah, receipts of capital projects, which is 12, and then proceeds from long term borrowing. So this is a cash inflow 25,980. Proceeds from short term borrowings again 20575. That is also cash inflow. Proceeds that's it here. And then let's see here, interest paid during the year was 10,520, so which is cash outflow, right? And then is there anything else? So here dividend include dividend tax paid 8535, that is a cash outflow. So we have done this, interest paid during this year done, and then so the dividend paid will come under, these are all done. Sorry, interest paid during the year will come under the financing activity, which we will record there. So cash flows from operating activities is minus 2895, and then from investing activities minus 22,634, and then financing activities is 2754. This is positive. So if we do plus and minus of all these things, you will get the positive of 1985. And then for this, if you add the opening cash and cash equivalent, which is given in the question was 5,003 rupees. If you add this, you will get the closing cash and cash equivalents. We'll see you in the next class for ninth problem.